This is Akashvani. In the program Spotlight, now we bring you a discussion on India's export growth touching a record high. The participants are Anil Padmanabhan, economic analyst, and Arjun J. Chaudhary, anchor.
So I'm joined by Shri Anil Padmanabhan, who is an economic analyst with us on Akashvani. And today's topic of discussion is on India's export growth touching a new milestone. And we discuss about exports and services, which has gone up by 4.39% to 339.62 billion US dollars in this financial year. And the overall exports has touched $776.68 billion. Mr. Padmanabhan, for the benefit of our listeners, how important are services to the entire export growth story of India, because it includes merchandise trade as well? But why it's so important right now?
Arjun, it's a very important component of India's trade, and this importance has grown particularly since 2020, and it's been a remarkable growth. As a result, its share in overall exports has risen from around some 20 odd percent to now something like 43 odd percent. So it's almost matching merchandise exports, which is remarkable because this growth has come about in just a few years. I can share some numbers with you. In 2020-21, the exports was about $206.1 billion. This grew to in January of last year, the cumulatively, to $272 billion, and now you just shared the numbers. It's some $339 odd billion. So if you look, it's nearing double from 2021, not nearly double, about 1.5 times it's grown, which is remarkable. And the key to this has been the growth in the value-added segment. India has traditionally been very strong on software exports and BPO. That's a great story of the 80s and 90s. But the most recent thing is the idea of global capability centers. They are value-added, R&D based. They are very highly skilled. So it's not body shopping. So that pivot in two respects are hugely significant. One, the size of the export in services, the growth has been dramatic. Second, the composition of it has changed.
So if you look at an alternative indicator, which is the PMI for services, you have PMI for manufacturing also. But my question is on PMI services, the Purchasing Managers Index, which is compiled by ISM. It is showing 61.2 for the month of March as compared to 60 for the month of February. When we talk about the financial year 2023 to 24, it has seen a huge jump, just as we've seen for manufacturing as well. How have we managed to achieve that specifically from the point of procurement and from the point of exports?
See, we can't separate the two because I don't know how the PMI on services is computed. But broadly, the trend is not surprising. Please also understand it's coming up from a trough post-COVID era and the recovery thereafter. It has followed the trend line of India's economic recovery, the overall growth recovery. See, in 21-22, the first quarter of 21, if you recall, the India's GDP contracted by something like 24%. And in the last quarter that we just saw ended December of 23-24, it grew by 8.4%. So that kind of recovery has been mirrored in the services exports. So I don't know how much of it is domestic and how much of it is export impacted, but definitely services pickup has been impressive and has largely mirrored the overall economic uptick that we are seeing in the Indian economy.
So for the benefit of our listeners, let's try and understand what are these services that India is exporting. You have these IT-enabled services, software product development, the BPO that you mentioned earlier, which was a success of the 80s and the 90s, and then of course engineering services as well. Could you shed some light in terms of how is it that we are able to export services and why is it in such great demand?
See, to a large extent, Arjun, we have to credit India's growing tech capability and, of course, the rapid ramp-up of infrastructure in this country. So whether you look at electricity, whether you look at roads, whether you look at transport, in every respect which are key to providing efficient services has grown dramatically. And more importantly, the services trade has increasingly become commoditized. By that I mean that when you commoditize any product, you can produce different parts of it at different places. So India has acquired that skill to exploit this opportunity with the commoditization of export. Thirdly, like I mentioned earlier, the big headline in our export services story is the GCCs, or the Global Capability Centers. These are, created by multinational companies, and they are located all over India. A large chunk of them are in and around Bangalore. And currently, India accounts for nearly 50% of the global GCCs. Now, they are coming here for cost reasons, scale reasons, and like I mentioned, good infrastructure. So everything is converging at this point of time to create the ecosystem to push this growth in export of services.
Mr. Padmanabhan, we have mentioned about what the export growth has been for the financial year 2023-24, where exports and services have gone up by 4.39%. But if you look on monthly basis, for the March exports, services are at $28.14 billion, and it has fallen marginally. To what extent would you say negative externalities in the global economy has contributed to that?
Arjun, it's possible negative externalities have kicked in, but don't go on 1 month, though that it's important to take note of it, because, and particularly it's the final month of the fiscal year, and this number may be revised subsequently. But the largest story is that for the full year, so that's where you're able to establish a trend. So you're not growing at the double-digit pace that we saw earlier, but you're still growing at single digits. And please understand the global economic situation is extremely inclement. If you never in the history of the world have you had 3 consecutive back-to-back shocks. Now I would add the 4th one too. First was COVID. Second was the Russia-Ukraine conflict. Third was the US Fed ramping up interest rates so rapidly it roiled exchange rates for every country in the world, including India. And now the latest, the Hamas-Israel conflict, which has now expanded to include Iran, is the 4th shock. This situation, don't expect trade to grow. In fact, the WTO, if I'm not mistaken, said global trade will actually grow by 1% this year, or it may even shrink. So the circumstances are extremely inclement. So if we keep that in mind, the annual growth rate is not bad, but you will see these kind of shocks monthly. You may or may not, depending, but do not be surprised about it. It's not to condone it, but I'm just saying that please factor in the inclement circumstances.
So you have the World Trade Organization, UNCTAD, forecasts for global growth being very pessimistic. I completely agree with you. There are also concerns you mentioned about West Asia right now. Merchandise trade appears to be affected. You see that our possibility rise in maintaining this momentum with services, or do you see both of them going hand in hand, merchandise trade and services, when it comes to export growth?
No, I think there will be a divergence, Arjun, because the ecosystem for merchandise exports is far more inclement than it is for services exports. Services exports, because of a digital product, largely it can be, handled differently. It doesn't need to go through the hoops that merchandise exports needs to. To give you an example, India trades a lot with Europe, particularly in the post-Russia-Ukraine conflict era, where India has been a major source of petroleum and products for Europe. And it was to go through the Red Sea. Now these terror strikes that struck on the Red Sea kind of disrupted the whole flow of merchandise, and then merchant ships had to be rerouted through the Cape of Good Hope, round Africa, and then to Europe. So it disrupted the trade. Now, that kind of impact you're unlikely to see in services. So I would see a divergence if these circumstances continue, and services exports will continue to grow. In fact, they are in positive territory, unlike merchandise exports in the current year.
So if you just look at the March exports, which combines both merchandise trade and services, it stands at $41.68 billion US, and it includes those items of trade, merchandise trade, which have gone up: engineering goods, electronic products, drugs and pharmaceuticals. They've all gone up, whereas petroleum, crude, coal, gems and jewelry have come down. Engineering goods going up. We know that engineering services have also gone up. To what extent do you see both of them going up at the same time?
Arjun, the problem is that, like I said, on the commoditization of services, now it's very difficult to call something a good and something a service. It can be a service and it can also be a good. Say, for example, India exports, say, some kind of computer-related service, and now they also provide the hardware for it. So how do you differentiate the two. So it will probably be clubbed as service exports. So I wouldn't worry about engineering goods per se, because more and more there seems to be a kind of merging of these two sectors, because in some areas, like we discussed software exports or engineering goods, you're going to see an increasing convergence. So I think that will continue to grow, but do not be worried about segment, commodity wise. The larger message on services exports, we should start looking at aggregates more than the disaggregates at this point of time, given the inclement circumstances that we are in.
To what extent do you see the import substitution, industrialization contributing to a reduction in the trade deficit when we are computing net exports as far as India is concerned?
See, Arjun, India's trade deficit has come down, but these are for a couple of reasons. One, on the export side, India managed to hold its own because it picked up on iron ore exports very dramatically. It grew by some 117%. It grew on drugs and pharmaceuticals, and it grew on electronic goods by something like 23.64%. Similarly, on the import side, we are seeing the impact of reduction in global oil prices, so which has impacted India's export value too. So if you look at our numbers, India's export of petroleum products, which is growing at a scorching pace in the post-COVID era, has now declined by 13.67%. So the same impact is being mirrored in the imports, because if prices have fallen, you may lose out in the value of your exports, but you will also gain in terms of lower cost for imports. So we are seeing, fall in the import value of petroleum products. And overall, we have seen the other shrinkage too, but this number, like fertilizer, crude and manufactured, it's fell by 39.23%. That's very substantive. But this gain was more than offset by the rise in gold imports, which has shot up by something like 30% in the last financial year. So if you look at it net, your exports have not fallen as much as we thought it would, given the circumstances. And on the import side, it has shrunk. So if you add the two, you're not surprised that your trade deficit has shrunk.
So if you look at input-output analysis in the factory system, and you look at foreign direct investment, where the finished product is not necessarily meant for consumption within the domestic territory of India, but meant for exports. So to what extent do you see FDI contributing to our exports?
It is contributing, and it will contribute even more as the PLI scheme, which is some 14 sectors, it has been implemented, and it's a pretty recent industrial policy change. But we are seeing in electronics, the impact has been immediate. So they will kick in gradually, but it's too soon, and please don't forget, globally the market is very tough. So FDI will drive this, and also keep in mind that no country in the world is going to be able to produce 100% of any product. So it will probably be about 60%, would be the upper limits. So there will be imported components in it. So even if FDI comes here, India will continue to import certain components to produce the final product, maybe for the domestic market, maybe for export, doesn't matter. But FDI will drive India's export growth in the next 5 to 10 years.
So when you talk about export growth, finally, to what extent do you see the rise in the foreign exchange reserves driving it right now, $650 billion US?
See, that, Arjun, is a outcome of not just because of trade growth in exports, whether it's services or merchandise goods. It has a lot to do with how the Reserve Bank of India has been buying up excess dollars in the market to keep the currency stable. So there are a lot of interventions they do. And as you know, India's equity markets are booming. So a lot of foreign portfolio money has been coming in. And going forward, now that India's debt has been included in the index of JP Morgan and now Bloomberg recently, more and more inflows are going to come in. So that is also a reflection of the kind of mop-up the Reserve Bank of India is doing. But it's great news because it means about 8 months of imports India is covered. That's a huge risk mitigation for any economy, particularly one of India's size, which is poised to grow.
Thank you, Mr. Padmanabhan, for being with us on Akashvani and talking to us in detail, discussions on India's exports growth when it comes to services and merchandise trade.
You were listening to a discussion on India's export growth touching a record high. The participants were Anil Padmanabhan, Economic Analyst, and Arjun J. Chaudhary, Anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official.